So what's the biggest difference between a 1031 exchange and a deferred sales trust? Well, I want to give you an analogy, okay? I want you to imagine you're at Blockbuster, and this was maybe 10 years ago when those are still around, and you walk in on a Friday night and you're excited to rent that movie. And at the end of the aisle, you can see the movie behind that cardboard box. Can you picture yourself there? You're about to get it and you're excited. But just before you grab that movie, someone who's 2 steps ahead of you grabs that movie, smiles at you, and you smile and you tip your hat to them because, hey, they got there before you, right? But you're frustrated because you thought, why can't I just rent that movie? I wish there was an unlimited amount of movies. Well, a thing came around called Netflix, and when Netflix came around, obviously it changed the way we consume movies, and media for that matter. And it has no timing restrictions, right? It has much more flexibility. Back to Blockbuster, you generally have to return something within 3 days. Right? With Netflix, there's no return policy. There's some ongoing fees. Well, that is the analogy between the 1031 exchange and the deferred sales trust. You see, the 1031 exchange oftentimes creates a situation where we're selling high and buying higher 180 days later. And what our parents teach us to do? Well, just the opposite. They taught us to sell high and buy low when it made sense on the deal, not because of the tax. And so too often my clients in the past, before they knew about the deferred sales trust, felt trapped by the 1031 exchange timelines, the Blockbuster way of doing things. So enter the deferred sales trust. We can now sell high and buy low whenever we want. So let me give you an example of that. Okay, we have a recent deal that just closed in Alabama. It's for a client. He was selling a $2.6 million business. He had a couple partners. He's ready to get out, and they wanted to buy him out, so he's ready to make a deal. The challenge was his basis was zero, and he had a $600,000 gain. So instead of just paying all of that tax, he was able to defer that using the deferred sales trust. But the next best party was able to purchase some land as well as develop multifamily units in Tennessee, all tax deferred using this trust. And when I first learned about this strategy back in the crash of 2008, it became very apparent to me that the Blockbuster way of doing things was no longer going to work for a lot of my clients. You see, they had worked blood, sweat, and tears for 5, 10, 20 years just to see a lot of their wealth diminish quickly overnight, really over the next number of years, as they fought the banks and had too much debt, not enough liquidity, not enough diversification. And so the deferred sales trust, we believe, is the best way to exit highly appreciated assets today because it gives you those core foundational ways of building wealth, which is diversification, which is liquidity, which is cash flow, as well as which is timing and flexibility to invest back into real estate or business whenever you like, all tax deferred. So we want to teach you more about this. In fact, you can go to our YouTube channel. You can learn more about this. We have lots of free content there. You can download our free ebook, and you can schedule a one-on-one consultation with me to see if the deferred sales trust is a good fit for you versus the 1031 exchange. Hey, thanks so much for watching this. All right, Jake, you take it away, and I'll be back.
All right, everybody. We're happy to have everyone here joining us today and excited about that new intro that Brett made. Wasn't that a great,
fancy.
Pierce?
That was fancy.
My goodness. Anyway, it looks like we got a few people chiming in here. Tina, how are you?
Hi, good. How are you?
Hi,
Very
Tina.
good, very good.
Hi.
Adam, how are you today? We got a few people. Sometimes we get like 30 people. Sometimes we get nobody, but then we record the video and people watch it later and then they call us. I think I once had a discussion, Pierce, about an hour and a half while in my fruit orchard, discussing the deferred sales trust with an individual that had over $30 million. And that was pretty chill. It was pretty interesting. The world of crypto seems to be ever changing, and it's pretty exciting. So today, some of the things that we're going to go over, success stories of the week. We're going to dive deep into what is the deferred sales trust and how it can help people who have highly appreciated assets. And then we're going to do Q&A. We're going to help those viewers who have chimed in today. We're going to answer their questions and see if, through sending these videos out there into the World Wide Web that we're not able to make the world a little bit better of a place as far as tax strategies goes, and as far as people being able to continually utilize their wealth before having to chop it up and divvy it out to the various taxing agencies. So with that, Pierce, tell us about this week. Tell us about some of the conversations that you've had and help us understand maybe from your point of view, Well, first introduce yourself, Pierce. Tell us who you are, what your specialty is, what you dedicate your day-to-day to, and why the Deferred Sales Trust makes a difference for you.
Yeah, so I'm a luxury realtor out in the Southern California coastal cities, and I deal with a lot of people who just have their trophy real estate who've kind of made it, and so they are looking for ways to kind of liquidate some of their assets and try and move assets outside of their taxable estates, and also, sell their properties and not have to pay capital gains tax on the sale of primary residence, which is something that really there's only a few people in the world who can do. And they're kind of sitting right there in the room. So it's pretty awesome. So that's kind of what we're doing.
I was going to say, sometimes they want to sell that trophy home of theirs, right?
Yeah, and they don't want to pay a tax, so they don't.
As a realtor, do you find that oftentimes, there's a number of objections. You can probably name 4 or 5 objections to listing a property, to selling a property. You probably run into people in that area who've probably lived there 20, 30 years.
Yeah, absolutely.
Probably, and what is it that you come across as a realtor as some of the common top 3 objections maybe?
Well, that was honestly like one of the big reasons why I moved into this market, specifically because I knew that people were, that had property for, 20, 30 years, and they bought it for $400,000 or $500,000, back in, the early 90s or something like that. And, it's worth $4 or $5 million now. And, they might be shacks or whatever, but they're getting to the point where they're, they need to move, or they need to, sometimes people are getting older and they need to go into a home or something like that, but they don't want to sell and not pay the tax. So they try and figure out other ways to do it. I think the biggest objection is that people just don't believe me when I tell them, hey, I can defer all your capital gains tax and you, literally can put it into any investments that you want. And they're like, no, it's like too good to be true. Like, you're just some punk. Like, I know, but trust me, I have this. Like, it's awesome. And it's not me. It's people who are way smarter. And I just am like, look, like, just listen. Like, and so I think that's the biggest challenge is getting people to believe that it's actually true.
Yeah.
Definitely.
So I was reviewing there in the Bay Area I was interviewing 3 or 4 commercial real estate agents, and I was trying to pull from them what were the most common objections to people listing properties, to people wanting to sell their properties. When I say wanting to sell, a lot of them have been in touch with individuals who want to sell their properties, but why don't they?
Right.
And they said, number 1, they don't want to pay taxes.
Definitely.
They said, number 2, they're too busy. They want to, they just don't get around to getting the information. They don't get around to having a meeting. A lot of them are business owners, so they don't have any time. And then number 3, what do they reinvest in?
Yeah. Where do they go?
So like a lot of them are thinking of a 1031. It's like, hey, if I sell this income rental property, whatever, what does it go into? And I think we'll address some of those issues here on the show. And whether it's highly appreciated commercial real estate or highly appreciated crypto or any other type of asset, could be a business. I want to talk about deal of the week right now. Brett and we were able to meet with a CPA who brought us a client. This CPA's client had a business that she started from ground zero, from nothing, and brought it to a $3 million business. And essentially, it's an e-commerce business. She sells supplements on Amazon. She does really, really well. And it took her 2 years to bring it from ground zero to $3 million. And, applause for her. She did a great job. Now she's just concerned about, hey, I built this to sell this, and I'm going to do this again and again and again. But man, taxes are killing me. And so what do I do? Anyway, their CPA has seen one of my presentations that I've given in the past to a national organization of accountants. I was able to coach and train them on what we term tax advantage wealth management. So she reached out and says, Jake, is this a client that you would have any strategies for? Is this a client that we can really help? And I was able to explain the deferred sales trust first to the accountant. And then later on, we had the client in a meeting with all of us. The client was very busy. So similar to the same hesitations that people have in the commercial real estate space. It's like, I don't want to pay the taxes, but I'm also so busy with work, and maybe we'll schedule a meeting like 2 months out.
Right.
Her CPA had the wisdom to encourage, well, by the way, 2 months out, you'll already have sold this business, and by then it'll be too late. A lot of times the planning must occur beforehand. We help people. One of the great things that Brett and myself and you, Pierce, and everybody else, that we kind of all work together as a team on this deferred sales trust, is we help encourage our clients to make conscious, deliberate decisions proactively. And so that they're prepared for this one-time really big transaction that's going to happen. And anyway, instead of 2 months out, we've met with the client twice in the last week.
Nice.
Client met with the attorneys. The client is very excited that now that she's in the contract phase, she can make sure that the contract's in the name of the deferred sales trust. Essentially, we're putting the trust in between the client and the buyer. And with that being said, the sale will actually happen arm's length in the name of the trust, not in the name of the client. Client won't receive any constructive receipt. Client won't have to pay any taxes on this transaction. And almost a 100% appreciated asset, zero basis and no debt. Just a wonderful business that she's able to now roll it over into something that doesn't require her that she punches the time clock every day. One of her biggest goals is that she can free up her time.
Yep.
And she's doing that by selling her business. And now we can help her reinvest in other assets. We can help her into some real estate. We can help her into some crypto. We can help her into the stock market. And we can manage a diversified portfolio where all the risk isn't just in her one business that she has to show up to every day. So we're helping solve problems. We're helping improve lives, and we're helping do it in a tax efficient way. That's been kind of exciting. I don't know if anybody here has any questions about that story, or if they want to ask. I mean, obviously I won't give any specifics about who the client is or anything like that, but I can talk specifics about the situation. Okay, so with that, let's talk a little bit about common questions that clients have. So we covered a couple of them. I'm too busy. Is it really important? Is it really urgent? And sometimes we have to help people understand the importance of what they do first versus what they do later. And it might almost sound scary, but sometimes we say, oh, okay, working with you, and based on your asset that's highly appreciated, based on the basis, based on the debt, based on depreciation you've taken, if that is relative, you're going to owe next year. You're going to owe, well, you owe for this year, but you're going to pay it next year, whatever it is, right? Let's say it's $800,000 because of all the taxes. Yep. And what if Biden increases the capital gains tax rate to something different? Anyway, is that important enough to speak now rather than speaking later? So sometimes we have to help clients understand the importance of sitting down with their advisor. Tina, I think you and I have had some conversations about that, where Tina has actually told me that, some of these clients, they just don't understand proactive planning. They don't understand, getting everything taken care of beforehand. Sometimes they just want Tina to take care of it all in the end, right? And tell us a little bit about that, Tina. Introduce yourself. Tell us who you are. Tell us how you met me, and tell us a little bit about some of those clients that just create a mess.
My name is Tina Allen. I'm Lynch. I am in just the outskirts of Orlando, Florida. I do have my Florida real estate license. Jake, I don't think you knew that.
Nice. It's good to know.
And I do have a broker who's been a good friend of mine for 14 years or so. And I got my real estate license because I was doing a lot of the paperwork, and, they go get loans and they're just like, oh, call Tina. She knows everything. And I end up in these large underwriting, this bank, that bank, that's income, liquidity, stuff. And so and then for some of them, actually, I take my clients to my broker, and then they have been purchasing houses or purchasing businesses or purchasing commercial real estate. And then, I get charge them an accounting fee, but then I get a referral fee as well. And then he also refers clients to me for my accounting practice, because I do accounting, bookkeeping, CFO, tax resolution, and planning, because I'm big on, I can't help you after the fact. And I tend to get a little crabby.
You have so much patience, Tina. And you tell them that you can't help them after the fact, but you still help them. It's just a lot harder.
It is.
I mean, there's less that you can do after the fact than doing things before. And one of those is the deferred sales trust. You can't after the sales transaction, you can't say, oh, let's rewind the tape and put the deferred sales trust in between. The law firm that does the deferred sales trust, they're very strict on being very conservative, on doing things the right way, being very transparent, so that if the IRS, 1 out of every 2,000 or whatever trusts that are done might get audited, just law of large numbers, right? And if they take their microscope and they look at all the fine details, the law firm is extremely strict about how everything's done the right way, everything's done beforehand. This isn't a just save taxes strategy. This is a deferred sales trust. This is actually purposeful. And we usually go through maybe 4 or 5 meetings with the client before they sign the dotted line, just to make sure that they go into it eyes wide open. They know the pros, they know the cons, they know if it's right for them. We actually tell people quite often that this may not be right for you. I mean, if you have a highly appreciated asset, but your basis is really high, or you have a lot of debt against it, or, if the situation, if all the stars don't align and it's not a home run, we tell them that, hey, if you want, this might be a base hit, or you know what, you might strike out here, if we're going to compare it to baseball. We don't want any client to ever get into a situation that they're going to regret later. My career is on the line. Brett's career is on the line. Pierce, when you're involved, your career is on the line.
My career is on the line.
If you're giving people advice on taxes, and if you're giving them advice on planning and strategies and everything else, we wouldn't ever want to get somebody into something that's not going to be in their best interest down the road.
I was going to say, I literally told a guy that the other day. I went and did a meeting with him. He had a $3.5 million house he was trying to sell, and they bought it for $650,000, but they put about $1 million into it. But they had a bunch of debt due to some family legal issues that was going on. And it just, like, the more I dug, the more I uncovered, like, oh, and then attorney fees, and then credit cards, and then you have to pay this guy, and then you have to pay this guy. And I was just like, by the end of it, he had, like, he was going to owe, $400,000 or $500,000 in tax. But, once it was spread out between the rest of the family, and all the money he was going to get after all the debt, I was like, dude, this isn't for you, and just, they didn't, it sucks when you can't help them, but
sometimes, yes.
But it is what it is.
We're upfront to give people that advice that, hey, there's other things you could and should do.
Yeah.
However, with that being said, interestingly enough, 85% of the clients that get to, like, the second meeting go forward with this strategy as we're explaining it to them. So we're pretty good at filtering, are you eligible? Is this appropriate for you, from the very first meeting? And then we go another 4 or 5 meetings to help people through the process, make sure they have all the education they need. They bring their attorneys to the table. They bring their CPAs to the table. They bring their financial advisors to the table. Anybody that's going to help them through the process. The last one that we did just yesterday, the individual brought just family to the table to help make the appropriate decision. And it was one of those where the family is just very tight knit. I was surprised. It's like, wow, would I bring my sister to the table? Would I bring my mother to the table just to hear about something that I'm going to do from a tax perspective? I kind of thought that was kind of neat. At the same time, there is a scenario where sometimes a base hit or a double or a triple, still works well for the client. So Pierce, this week, Brett and I spoke and met with an individual that did have a lot of debt against the property. However, we did a combination strategy where we did a 1031 on the debt, as well as the deferred sales trust on the sale of the property. And that ended up being, again, a customized effort to make sure that the individual was able to roll over the asset and reinvest the gross proceeds net of the attorney fees instead of net of taxes, right? Net of the attorney fees, which that is much smaller, and still not receive boot from getting rid of the debt because he was able to 1031 the debt into a Delaware statutory trust fund. Very exciting how we're able to sit down with people, go through their scenario, understand how they're different from everybody else. And again, the deferred sales trust is one of those things where it's not a one size fits all. It is an animal that can be customized, and occasionally you do have to add other strategies so that the end all outcome for the client ends up being more favorable. Anyway, kind of fun, kind of exciting. Tina, what questions do you have for today's show?
Well, I did listen to all the past videos, like you asked me to, said that I could. So of course, right into them I am.
Tina's always one of those people that she does a lot of research. She does her homework. You tell her to show up to a meeting and she's actually going to review everything before the meeting. So it's always been a great pleasure to work with Tina.
I try and stay as educated as possible because, it's just always constant changing and there's always new stuff out there. That's why it's so exciting to me. But I guess a couple of the questions I did just send a link. I don't know if my broker is busy or not, but I sent him a quick link because I know that he has a client that I'm reviewing he does 1031 exchanges and he'll look at the tax return and say, this isn't right. And he'll send them to me and then I'll do the right tax return because they're getting a gain. So how does that happen? So, he's like, oh no, we need to have Tina look at your tax return before you file it because this is not the way it's supposed to be. But I know that with Biden, he's thinking about limiting that. That's going to hurt us when we try and get some of these people to roll their real estate. I know he has a client with 30 real estate holdings here in Florida that, in a central Florida area. I think they're California residents that he's working with. So this might be something, you figure maybe 200,000 per property. So if you add that up, maybe this will be in the ballpark of where they need to be for this to be effective. Because I think you told me $1 million.
Typically the $1 million is there is no statutory number, right?
Right.
But for the law firm to sign off and say, hey, we accept this transaction as one that is in the best interest of the client. Just arbitrarily, they say $1 million is oftentimes something that shows that they're going to be in the highest tax bracket, that they're going to pay the highest capital gains tax rate, that there's the most amount from there and above, they're benefiting. It's an easy home run, so to speak. Now, could a transaction of less than $1 million also make sense? It is possible. But just similar to your client, and it might be over a number of years, or it might be all at once that they're going to be selling multiple properties. It reminded me of another client that we spoke with this week. And Pierce, my goodness, Brett and I, we've just been on fire. We've had probably 10 deferred sales trust meetings this week. It's been a very busy week. One of them was with an individual that has over they currently have 173 properties minus 15 that they've already sold.
Wow.
And so stepping in and trying to analyze, how do we make this work? That's a lot of moving pieces. And at what point in time will they be sold? And does it make sense, et cetera? So very exciting client to be working with. And we're still working with this individual, progressing forward to provide the best possible process to ensure that everything happens as it should from a tax perspective. And it's kind of fun.
So I have a question. if someone is a real estate broker and they do flips, would this be a way that they could get out of that profit, paying on the profit, if they're buying, rehabbing, and selling? Because I had a client and that getting that in the right year, and his income will go up and down till we put it all in 1 year. Would this be something that would be benefit for them, because then they could just roll it all in the deferred sales trust and just carry the profit forward?
It is very possible. A lot of times we like there to be a significant first transaction. And then, Pierce, I don't know if you've had a client recently that's done this, but if we have a deferred sales trust that is existing, that has assets in it, the deferred sales trust may assist in future business ventures, so to speak, kind of as the limited or passive partner. And in a way, your deferred sales trust kind of acts like the venture capitalist that puts the money down. And then you have another LLC that is the operating company that goes in and rehabs and sells and everything else. And it would probably be kind of like an 80-20 split, where most of the income and the revenue is associated back to the limited partner, which is the deferred sales trust, right? And then the LLC that isn't receiving a lot of the income is doing a lot of the work. And that can also work for the fix and flips or the buy and holds. Now, what additionally is beneficial in the buy and holds? Well, if you buy and hold, now you've got a new depreciation schedule. So you're allocating a lot of the income to the deferred sales trust as the silent partner, and you're allocating a lot of the depreciation to the operating entity that is outside of the deferred sales trust, which is in your estate, which gives you, without the income offset, it gives you the depreciation expense, which can be a phenomenal tax strategy for a lot of other people that have outside income that they need to offset through the depreciation, while they're not getting the tax burden of the additional income. And so, I mean, that's just one scenario out of many scenarios, but you can see how tax planning goes to a whole new level once we're able to incorporate what I call a financial tool. I call this deferred sales trust a financial tool that goes in the client's tool belt amongst many other things that they can use together or independently. So very, very, very exciting. Now let's talk just a little bit more about crypto. Brett and I have had some very good success setting up. Now we're on our third crypto deferred sales trust. What does that mean? So we've had other clients that have done the deferred sales trust, and we've approached it through a number of different ways, whether it's through a stock sale or other things. But now we've been approaching the crypto because of Kraken and Gemini and some of these other digital wallets that are working with us. They've acknowledged the existence of the deferred sales trust as an entity. So like Coinbase, if you set up an account with Coinbase, that's not just a personal wallet, but a digital wallet, you can do a normal like family trust account. You can do a business LLC account. You can do a C Corp account. You can do an S Corp account. They look for like a recognized entity. And now more and more, we're having these digital wallet platforms or custodians recognize the deferred sales trust as an entity. And what took probably over 90 emails and probably 3-4 months for the very first account to open up with Kraken, now we've successfully opened up another one in less than 2 weeks. And we're on our third one that hopefully will open up any day now. The process is just quicker and quicker and quicker. And now we also, when anybody that has a crypto account, has anybody ever received a dedicated specialist who is like the same person that helps them through? It doesn't happen. It doesn't exist. However, we have a dedicated specialist with Kraken that helps our clients set up accounts quickly and get everything taken care of, to where as they're transferring coins over into their trust crypto account, they're able to not have to wait so long to sell out of those positions, because sometimes timing can be incredibly critical and important. A lot of times we help the client get everything set up. We help the client know and understand the new process, how to work with the trustee. how to coordinate the selling of the coins or the purchasing of new coins. And it's been a fun process where we've been able to provide solutions to a lot of the headaches other people have had. When I say solutions, I'm not just talking about taxes, but we've had clients complain that, hey, if I want to participate in this deferred sales trust, here's again one of their hesitations. My goodness, it took me forever to set up my LLC with whatever platform, right? And now we can tell them, well, hey, we can get it done in probably 2 weeks or less. And so whenever there's a specific scenario out there that we see time and time and time again, Brett and I and Pierce and everybody else, we team up and we try to find the very best possible way to achieve and to overcome some of those obstacles. And one of those was simply just getting a digital wallet in the name of the trust. That was something that we were working on 6 months ago, and now we've got great solutions for. And more of these custodians are jumping on board, and it's pretty exciting. I think, Pierce, you commented on something earlier on. You said one of the common hesitations that people have with the deferred sales trust is they just haven't heard it before, right?
Yeah, that's definitely I have people who handle that for me, and they just assume that they know, and they don't 95% of the time.
So if somebody has their own advisors and they're paying a really big firm to help them with tax planning, to help them with everything else, what do we have at our fingertips to support the deferred sales trust when their advisors sometimes haven't heard of it before? Before I answer that question, Tina, can you tell the group where you met me, how we were introduced?
I am a member of Seven Figure Firms, and I met him through Seven Figure Firms, and I had several clients that own multiple entities, and they were partners, and very complex cobweb situations in different types of industries, and definitely needed to sort that out, and also get a buy-sell agreement because of two partners and both married with young children. Interested in investing in real estate was another thing. Then we did the mentor. I don't know, you were my go-to guy.
Yeah.
So
So
I schedule webinars with him when I have something important where I don't know what I can offer, because I know there's something and I know a little bit about everything, but I don't know everything. And I think that that's something that he can help me with, and we can work together on. So.
No, I appreciate that, Tina. So Tina, prestigiously, there's an organization out there called Seven Figure Firms. It's also part of CoreV, part of accountingtax.com, several different entities out there. But this organization has over 10,000 accounting firm owners. So principals of accounting firms, accounting and tax firms that are members. And there's people that belong to kind of the more elite, or they pay higher dues, I guess. Tina, you pay higher dues, right? So you're part of the top 400 of this 10,000 member group. And because you're in that top 400, you had access to me. When I say me, there were 8 instructors, and I'm no longer there. I was there for about a year, and I helped people with what we coined as tax advantage wealth management. And even in addition to all that, I was kind of assigned to you because you had a lot of cases and you had a lot of things going on, and it was fun to help you through a lot of these financially related tax situations. When I say financially related, financial product services, how do they incorporate? How are we moving assets from column A to column B, increasing actual net worth while decreasing expenses? Some really fun things like that. I bring that up to answer the prior question. When somebody else's advisors haven't heard of this before, when they don't know about the deferred sales trust, why is it they haven't heard of this before? A few different things. One, the strategy has been protected from abuse and misuse. How did that happen? Somebody who created it, Todd Campbell, 25 years ago. He kind of patented the process. And so only his law firm for a long time could produce this process and service, this strategy. In a way, you could say that it was the secret sauce. They protected it. Sure, you can say, well, then only they can do this, and all clients that want this have to go to them. But at the same time, if everybody under the sun was doing their own variation of the same thing, it would be changing. If there wasn't quality control, it wouldn't always be done the same way. And you can see other strategies that are under scrutiny, everything from the 1031 exchange to the monetized installment sale to family endowment office or family endowment plan to all these other strategies that are good strategies that people have changed and altered and in a way abused. And so there's several court cases where client wins and the strategy works. There are court cases where the client loses because they did it too far from the original intent of the strategy and they lose the deduction. And that's with these other strategies. However, the deferred sales trust to date has a 100% track record with the IRS. Thousands and thousands of trusts have been done in the last 25 years. Because so many trusts have been done, it has been audited more than 14 times. And this is something that should give everybody peace and calm. It has been audited, it has been tested. One of the times that they did the deepest audit was on a $125 million house in California that was sold. Rolled over into the deferred sales trust. It was not a taxable transaction. The IRS audited, went in with their surgeons, so to speak, looked at every little detail. And just like a home inspector, since Tina, you do some real estate, Pierce, you do some real estate, a home inspector, to justify their job, it's almost like they have to find that one outlet that is a little bit crooked or that has a wire loose or whatever. And that's important that they go that deep and that they find anything and everything, right? But they always have to find something. But for an IRS agent, similar to like a home inspector, to justify their job, they always have to find something, right? But for an IRS agent, IRS agents, multiple different agents over the last 25 years, 14 times audited, to have zero findings every single time, to have no change audit, that's almost unheard of. That doesn't exist anywhere else. So when clients come to the table and say, well, I haven't heard of this before. Well, that's probably okay because it's been protected. And oh, by the way, just because you haven't heard of it doesn't mean it hasn't been around for 25 years. And just because you haven't heard of it doesn't mean that other people aren't doing it and that they're not saving sometimes
Millions of dollars
in taxes by doing this. And it's very exciting to take them through this journey for those people that are willing to come to the table in a non-combative format, willing to be open-minded, willing to learn. We actually had one of the top estate planning attorneys here in the state of Utah on one of our calls. Never heard of the deferred sales trust before. Never heard of it. And went through the process with his client, asked some really good questions, some phenomenally good questions. He was taking the client down the road to try and help the client make his asset, it was a $100 million asset, make his asset worth less so that year over year over year, he could be gifting it to his heirs and, avoid less estate tax by gifting it over time, by devaluating the property because it was in a partnership with his brother and, just making it less marketable and all these other things. And at the end of the day, we explained the deferred sales trust, and it was kind of like a light bulb. It was like, my goodness, we don't have to try to devaluate the property. In fact, we can try to make the property worth as much as we possibly can and sell it for the top price through the deferred sales trust and roll over substantially more assets that eventually can go to their heirs. And kind of like we explained earlier on in today's show, if they use the deferred sales trust as kind of like the venture capitalist or the passive investor, the limited partner in a joint venture with another outside LLC or outside entity to go forward and buy more properties, his family, his estate, his heirs are going to get a brand new depreciation schedule outside of the trust, while most of the revenue goes into the trust. From an estate planning standpoint, we're moving assets outside of the estate. He's not having to devaluate things, make them worth less, something that could be scrutinized over time. It ended up being just a remarkable conversation with an incredibly brilliant estate planner. And it was fun. It was fun because the individual, so here I am, this young 37-year-old guy, and this estate planner is probably in his late 60s, incredibly brilliant, but not egotistical. I mean, easy to work with. And as long as we had responses that like referred to the IRS code and responses that referred to credible sources, and we could show him that, hey, yeah, it's been audited 14 times and it came out clean. And the largest audit was a $125 million property. Like, these were things that he understood, and he was able to give his client like, wow, this makes sense. You know, let's hear more. And so kind of fun. We are able to help the clients get the answers.
Jake, I got a question for you.
Go ahead.
How is there a way that you can find who the like attorneys and the estate planning people are? So there's a property in Huntington Beach that's undeveloped right now, and it had the husband was going to sell it. He ended up dying, and the wife is 83 years old. She's, dealing with all this stuff, but her biggest thing is, she probably doesn't want to be taken advantage of. And she has, estate planners and all that trying to figure out the whole situation going on. When I was talking to her about it, she didn't, I don't know. She didn't know. She didn't want to know. How would I go about finding who that estate planning attorney is to get in touch with them to be like, hey, come look at this?
That's a great question. I mean, of course, there's confidentiality agreements with the clients and everybody else, and there's no public way of knowing, other than you can go to some of these estate planning conferences, and specifically in California, Las Vegas, Washington, D.C., New York, and occasionally New Orleans. They have conferences that are being held for estate planning events. I want to say Vegas because it's always such a central location. They've been doing things a little bit more online with the pandemic, but however, there's opportunities to go mix and mingle and possibly even guest speak at some of these events and get in front of these estate planning attorneys. To find out who's the estate planning attorney of a particular client would be rather difficult. Most estate planning attorneys should be very quiet about who their clientele is, and so that shouldn't be public information at all, unless the client themselves are talking about who their attorney is, who their financial planner is, who their attorney is, who their CPA is. Otherwise, when you get into the higher echelon of the one percenters, a lot of times everything that's ever done is extremely confidential.
Yeah, that makes sense. So there's no way that you could track that down without getting it out of the client.
Correct. And that would actually be the very best way. Just saying, hey, who have you gone to that has provided you the very best advice? And you're not even necessarily saying who is yours, but who have you gone to that has provided you the very best advice? Who would you recommend that somebody else use? Oftentimes it's the person that they're using.
That's a good idea.
So,
interesting. Okay.
Yeah. I mean, it becomes less a softer approach if you're just asking for a recommendation rather than who do you use. Anyway, with that being said, we did have a couple other people join. We have Tab Bish. I don't know, Tab, if you want to say hello, tell us where you're calling in from today.
Hello, I'm calling in from Orlando, and I'm one of Tina's clients.
Oh, very good. Well, Tab, glad to have you. And my goodness, look at you, Tina, just bringing people in immediately into the call from your very first call. Very good, Tab. You're one of Tina's clients. Tell us what you do.
Real estate.
You do real estate. Very good. And do you ever have any clients that might have highly appreciated assets that one of their largest hesitations to list or to sell is the taxes?
Yes.
Okay. Well, very good. I won't tell you that we're a solution for everyone, but we happen to help out a lot of people in that situation. We're also really good at telling people when it's not a good fit. I think we covered that in the very first 5 minutes that you probably missed of the show. But just for interest of the day, you don't have to, I'm kind of calling you out on the spot, but would you have a client scenario? You don't have to tell us who they are or anything like that, but maybe throw us a client scenario and we can just spend 5 minutes discussing what could be the possibilities for this client.
So I have a client who has a property worth about $2 million. It's raw land. They only purchased it for $250,000. So they're hesitating on listing it. And they don't really want to do a 1031 exchange and be forced to buy something right away.
Very good. So 2 hesitations there. Hesitant because of paying the taxes, and the other tax strategy they're aware of where they could either defer, roll over the built-in capital gains. They're hesitant. Obviously 1031 has a few encumbrances in the sense that you have a time period they have to roll things over into. So if you're selling high, then you have to turn around and buy high typically, unless you go into a completely different market. You have to abide by the like kind rules. If you've ever lived in it, you can't do a 1031. Just so many different things. Plus the 1031s falling under a lot of additional scrutinies, not only at a federal level, but in the state of Oregon and the state of California. So with all that being said, we actually help a lot of clients in that very, very same situation. $2 million basis or original purchase price of $250,000. Have they taken depreciation?
It's vacant land, so I don't believe so.
Okay, so undeveloped, very good. And do they have any debt against the property?
No.
Wonderful. Well, we have my co-host here. He just joined us, Brett Swartz.
$100,000 gain.
I'm going to tee you up for a good one here, Brett. We've got a $2 million property. Original purchase price, $250,000. Client is hesitant to list the property for sale because he doesn't want to pay taxes, and he's not interested in a 1031 exchange. What can we do? What are the advantages of the DST? I'm not putting you on the spot at all.
No, it's all good. Thank you. This is what we do every single day. Thank you, Jake. And hey, everybody. Hey, Pierce. And hey, Tina and Adam. And I think it's Tabur and Tab. And welcome. You guys seen Tabur and Tab for the first time. Hopefully I'm pronouncing your names correctly. You have to correct me if I'm wrong. But I'm curious on what state the property or asset is located in.
This is
Florida.
This is Florida. Okay, so a little more favorable. And is it a multifamily property? Is it a industrial property? Is it a high-end primary home?
It is raw land, undeveloped.
Raw land undeveloped. So there's been no depreciation, right? It's just raw land. And
Correct.
so we like to use somewhere around 20% federal and about 4%, 3.8% with Obamacare. So about 25% of that $1.75 million gain. So if you take 2 million minus the 250, I get 1.75. Then I'm going to take 24%. That's going to be $420,000. That's the liability. Do you guys see how I got there?
Tina,
Yes.
do you approve? Tina's an accountant, by the way.
Oh, cool. Hey, Tina. It's awesome. Accountant. So that's the number we're trying to solve for. So we always want to start with the pain, and the pain is $420,000, right? And if there's no pain, or if the pain's too small, then we're not helpful. But in this scenario, we are helpful because it's big enough. We like to see at least a $1 million gain, $1 million net proceeds. So we got both of those parameters there. Then you mentioned he doesn't want to do a 1031 exchange. Okay. I mean, it would be good to understand why he doesn't want to do a 1031 exchange. It could be age, it could be time, energy, stress. And then we can also show how the deferred sales trust can solve that. But the most obvious way would be Jake Mueller, for example, would be the financial advisor. He could manage the funds in investment grade securities, completely passive. Right. There's also some other real estate opportunities that can also be passive. If he's more of a real estate person, we do kind of a mix between those things. But we're going to first understand the pain, second, understand the desire, right? And then third, see how the deferred sales trust can solve that. So the next step would be just really digging into the motivations for selling and the vision for his wealth plan. And then we can apply the deferred sales trust. But some common ones are like the ones I just said, no more toilets, trash liability. But they also want liquidity and the ability to access the cash quickly should they need or want it for themselves, their family, and or other investments that they want to go in versus what's called a Delaware 1031 or a traditional 1031, in that if you're going with partners somewhere else, it's typically illiquid. 7 to 10 years, especially for Delaware 1031s. No control, no real diversification, huge fees, And so the deferred sales trust on the other side, we're going to give them liquidity. We're going to give them access to the cash, right? They're going to have the ability to go back into real estate should they want to, or maybe never again. We have some clients, for example, they sold in California. They moved to Atlanta, Georgia, and she sold her property, and she's going to partner with her son on a business deal, right? A business deal, all tax deferred, and they're going to buy some rentals. And so hopefully that makes sense so far. Any questions there?
I think I would just add that, they're hesitant to do a 1031, everything that you just mentioned, Brett. But the breadth and diversification of new assets that we can roll that property into within the deferred sales trust. We've got clients with crypto, we've got clients that have life insurance, we've got clients that have real estate, obviously marketable investment grade securities, other business ventures. And so essentially the flexibility of what you can reinvest in with the deferred sales trust is enormous. However, if the client just wants to sell and spend the money on personal stuff, this wouldn't be an eligible strategy. This is for somebody who wants to maintain the asset and the purchasing power of the asset to reinvest ongoing. And of course, they have access to the principal at any time. They have access to income from it. And we can structure this so that they can have an income stream if they want, or they don't have to. There was a multifamily sale in the Bay Area where the really nice old lady didn't want to pay the taxes, but she didn't want to, and she also didn't want to give up her $8,000 a month income. Well, it was multiple multifamily units, and just by selling one unit alone, we were able to replace her monthly income, as well as do it in the deferred sales trust and not incur any taxes. So very exciting. That goes back to what Brett was mentioning, how we want to know the client's situation. We want to know their future investment objectives. And this is definitely something that doesn't come out of the box ready for anyone. This is something that gets customized for every single client.
Perfect. Excellent. Any more questions or thoughts from anyone else? Because we are up against our time here. You guys have been working hard for 51 minutes.
Yeah. So
How big is that land?
38 acres.
It's a good size.
maybe I want to buy it.
Yeah.
Out there in Florida. Where in Florida?
The land.
Did you say Orlando?
The land. It's north of Orlando.
Durant. Okay. Is it?
What's it zoned for?
Yes, that's the question.
It's agricultural right now, and it really could only really be houses, residential.
I can go put a cabin out there. I can turn it into a hunting resort.
Sure.
Excellent. Look at this. We're selling 38 acres on our tax strategy call.
Can we put a subdivision on it, Tab?
You could, it would be 1 acre. Each of the parcels would have to be 1 acre.
But that's 35 houses then, right?
Right.
So we could do a nice subdivision there.
Correct.
Yeah. What are the values of the houses around that area?
You would get to 500 to 800 mil.
Okay. So today on our call, just as a brief summary, we have Tabor Lovelace, we have Pierce York, we have Tina Allen Lynch, we have Tab Bish, and Adam Jeffries. Today's call is with Jake Miller and Brett Swartz, co-hosts for the Deferred Sales Trust crypto call. Today we've been talking a lot of real estate, and we do this show every week at this time. And happy every Friday to take questions, provide live answers, as well as to discuss the deferred sales call of the week that we were able to have and make a big difference in someone's life and help them proceed forward with their goals, dreams, aspirations in a tax efficient way. Any additional questions that people have, you can reach out to us. You can reach out to me directly. And again, in my role in all of this is I play the financial advisor role. We help other CPAs, tax accountants, and individuals with tax advice as well, tax strategies. And you can reach out at 1-800-773-1848. My email address is also Jake M, Jakem at alphamark, ALPHA mark.com. Brad, how do people get in touch with you?
Yes, you can go to capitalgainstaxsolutions.com, and you can also go to the YouTube channel and then subscribe, rate, review on iTunes as well, our podcast. We also have the Expert CR Secrets podcast as well, and YouTube channel. So you can go there and schedule a time, and a $1 million net proceeds, $1 million gain on a per transaction basis if you have that. And then always remember, timing is key. We want to make sure we get early so that people don't feel so stressed, and try to demystify and bring them on here. Bring clients, friends, family, whoever. Bring them to this, we call it like an open forum every Friday and PST. And we so appreciate everybody. Pierce, you want to give your little shout out? And Pierce is going to be taking over the podcast here soon, a big part of that. And also Jake's going to be a contributing host as well. But Pierce, you want to remind people where they can find you?
Yeah, you guys can find me at Pierce, Pierce, at kingdomluxuryrealty.com, or you can call my cell at 916-878-0903. You can text me, call me. And I'll have some YouTube and all that kind of stuff up and running here, hopefully in the next couple of...
He's going to be a YouTube superstar with the DST and luxury real estate. This is the guy right here, people. Watch
right.
for him. Like Jake's hair is still flowing in the wind. Like Pierce's like his tan.
I got this new stuff.
His tan and he's got with 3 daughters now, Pierce.
November will be the 3rd.
Yeah.
Very good. Well, and I believe that Tab joining us today. Also, Tab, am I correct that you're a broker out there in Florida?
Yes.
Very good. Do you want to give a little pitch about your brokerage real fast?
It's just a small brokerage, just me. So I'm not looking to attract anyone other than clients.
Very good.
Cool.
All right.
Come on
well,
back, Tab. Glad to have you. And thanks, everybody. We'll see everyone next week, okay?
Yes.
Thank you, Tina. Thank you,
Bye now.
Pierce.